Welcome to a field of perspectives where ideas take root and conversations grow. I'm Brittany, your host. Each week, we step into new terrain, exploring fresh viewpoints, challenging assumptions, and learning from every walk of life. From personal stories to powerful insights, this is a space where every voice matters. Join us in a field of perspectives. Subscribe now and let's grow together. Good evening, everyone. Happy Thursday. I hope everyone is doing well. We have a wonderful guest today, and I'm so excited to jump on in. On today's episode, we're excited to welcome Bryan Griffin. He's a dedicated life insurance agent who's passionate about helping individuals and families protect their financial futures. He has over 9 years of experience in the insurance industry. Bryan has guided countless clients through the often confusing world of life insurance, making sure that they have the right coverage for their unique needs. He's here to demystify the process, share insights on what to look for in a policy, and explain why life insurance is a critical piece of any solid financial plan. And without further ado, let's welcome Bryan Griffin. Hi, Bryan. How
Good
you
evening.
doing?
I'm doing
Thank
well,
you
Brittany. How are you?
Good. Thank you so much for being on here to share your wonderful knowledge to help these families that are really needing information on life insurance. Life insurance can be super
Absolutely.
confusing, super confusing.
It can be. It can be.
Yes, and I'm
Definitely.
sure you deal with a lot of families that are don't even know where to start.
Yes,
Yes. So
definitely I
let's
do. But
let's
I'm here.
jump
But I'm
right.
here to help them.
Yes, thank you, and we greatly appreciate you. Let's jump right on in. For one, you're local. You're in Kannapolis. That's right.
Correct. Yes, I'm in Kannapolis, North Carolina. Kind of
Awesome.
local to everybody. Kind of
Yeah,
centralized, right in the middle.
exactly, exactly. So that's amazing. So I'm sure if anyone needs to meet up for lunch or talk to you in person, you'll be available to help.
Absolutely. Definitely available for meeting up and sitting down and having a latte or a cup of coffee and just talking about what life insurance is. I'm open, book, open, and happy to make an appointment to meet with someone. Absolutely.
Yes, thank you. So, Bryan, what really made you get into the insurance world?
Well, one of my best friends, his name's Isaac. He is an agent, and he came to me. We've known each other 30 years now, over 30 years now, and he was enjoying it. And he knows that I'm always looking for different opportunities, different streams of income. He knew I worked customer service. I had those skills, had some sales background working for Best Buy, and so I was like, man, insurance, nah, I don't want to do. But I looked into it, thought about it, and I was like, hey, this is another license, another revenue stream, and yeah, I realized, basically with working through customer service and just growing up where I grew up, it's some people that are misinformed and they need help, and
Mm.
so I was like, if I can help them, and I can help me, and we all get help in certain ways that way, why not? Let's go ahead and do it. Let's go ahead and do it.
Right. That's amazing. So 9 years. Wow. And
Nine
you
years.
have to love it to still continue to be doing it. That's amazing.
Mhm.
So what are the
Yeah,
most
9 years. Let's continue. I'm sorry, Brittany. Go ahead. I'm sorry.
No, go ahead. I would love to
I was going
hear
to
what
say,
you
9 years, 9 years continuing education. Agents still have to study, keep our licenses up, everything. But it's fun because, we learn the different changes in the industry and, I stay abreast of everything so that when I am sitting in front of a client, I'll make sure, I know everything that's going on here in the state of North Carolina where I'm licensed.
Oh, awesome. Amazing. I love that. So what are the most common misconceptions people have about life insurance?
The first misconception, Brittany, is that they can't afford it.
Mm.
They think it's this big, huge, astronomical expense. And that's one of the things that when we actually sit down and start talking about it, showing numbers, showing how things are calculated, that sometimes and hopefully they realize this is cheaper than the cable bill. It is,
Mm,
or it's cheaper than my cell phone insurance. That's one popular misconception. The other is I don't need it. The other is I don't need it until I'm 60 or 70. That's the
wow.
other, younger people, single people just don't think, well, I don't need it right now. I'm in the prime of my life and I don't need it right now. I'm
Right.
invincible. Everything's gonna be okay. I'll get this when I'm 40, 50,
Yep.
60. It's best. It's best to have, if you want life insurance, it's best to get it as soon as possible. So those are
Yeah.
two, in my opinion, the two biggest misconceptions.
Okay. Now I will say when I think I got life insurance when I think I want to say I was like 21, and I would talk to older adults and they were like, "Why? What? You have life insurance? Why? Why do you have that?" I'm like,
Right.
"Well, you never know when your time is going to come, so you definitely." And then I had a child, which I did have insurance on him as well. Well, still have,
Hmm.
but the thing is, they're like, "You don't know." I'm like, "You don't know when you're gonna leave," and so I have to leave something for my child. I don't wanna leave him here alone, and I know, my family will take care
Right.
of everything, but I want to leave something.
Right.
So, I was happy to have
Very
some.
good mentality.
Yes, yes. So, how do you determine, the right amount of coverage for someone?
It depends, but there are two or three ways that we can probably do things. One, Brittany, is to, let's just say that I'm talking to a client and their annual salary is $50,000 a year.
Mhm.
We can say, hey, let's do 50,000 times five. That's 250,000. Let's see what that looks like. We can say, hey, let's do 50,000 times 10. That's 500. Let's see what that looks like, and so on. And let's just kind of see. That's one way to do it. And that's probably like the easiest way to kind of work it that way. Another method that we use is called the dime, just like the dime, the coin. And
Okay.
it's the D. The D is for death and final expenses. So the funeral cost, medical bills, paying, the church, all of that stuff, having that covered so that you don't have to worry about it. That's the D. The I is income protection. That same way that we're looking at, like, again, I make 50,000 a year. If I want to leave that to some, and I've got a child and his or her, well, it would go to him now, but for that beneficiary, how long do I want my income to protect those that I'm leaving? You know, 5 years, 10 years, what have you. M is for mortgage. If you got that, you put that in there. And then E is for education. You put that in there, for the kids. Hopefully they're gonna get those scholarships. But hopefully, so you put that in there. And then you just add those up, look at the numbers, and then just kind of drill up or drill down, based on need. So those are the ways that I typically, when I sit down with someone, kind of talk to them about it.
That's a really smart way to look at it. Like, I didn't even think about education, you know? That's
Mhm.
definitely not one that
Right,
I thought
right.
about, but that's really smart. Very smart. That's a great way to
Mhm.
break it down for me and everyone else to understand about how much you need. So that's good.
Right.
And
And
is
and then after we do that, and as long as we've been honest and with everything, this is going to show based on what someone shares with me. This is how much you need. But then we talk about how much can you afford, because I don't want you, because again, I don't want it to this something that you need, but I don't want it to be so much that you can't pay it each month. So,
I
all right,
see.
so this is going to be, hypothetically speaking, $100 a month. Well, wow, I can't really do that. Okay,
Yeah.
what's 75 looking like for you? And so for 75, it'll be this amount of coverage. Well, I can do that. So and then we'll
Mm,
kind of do that as well. But I also kind of help them if there's some other ways I can save them some money to maybe
mhm.
kind of shift some things. I try to help them with that too. I can also hook them up with auto insurance. I'm not licensed in auto insurance, but I have business partners who are. They can call, get a quote. I might be able to save them money on their life insurance. Then you can take what on their auto insurance. Then they can shift that over to have more life insurance, or
Wow.
also just kind of sitting down with them talking about maybe their debt and their bills and doing something that's called debt stacking or debt snowball, where you just
Mm,
take all the bills, look at what you're paying each month, but on one bill you focus on getting that one knocked out. And then
mm,
once that one's paid off, you take what you were paying on that per month, add that to what you're paying on this bill. So now you're paying $100 on this bill, you're knocking that out. When you get
mm,
that one paid, you take everything that you were paying on that and add it to the monthly. And then, if you get a bonus, you get some income tax, put it over there. And that way you're also, getting some of you're holding on to more of your money. It's not, everything's not going bills, bills, bills. And then you
yeah.
can kind of shift some of those resources if you to really get the amount of life insurance that you really need.
Yes. It sounds like you're helping families more than just with life insurance, and that's amazing because we're talking about, budgeting and, getting
Mhm.
the families the coverage that they need and helping them, showing them how. That's, really
Yeah.
amazing because, most people that do are in insurance are just, "Oh, here's the policy. This is what you get," and that's it. But that's really amazing that you provide those resources for families and saving on
Yeah.
auto insurance too. Who wouldn't wanna
Mhm.
do that?
Yeah. It's possible. It's possible. And if we can't beat what you currently have for your auto insurance, you got the best rate out there. Because we're going to try to
Ah,
find you something that's going to be right on par with the coverage that you have, but for less. We'll shop it around and we'll it's free. It doesn't cost anything. In fact, everything I do is free. We do what's called a financial needs analysis, and we'll
mhm.
sit down and we'll talk about all these things. And I know the more that you can give me, the more I can take and input and come back and give you everything. It's confidential, it's free. Even if you don't get any life insurance from me, anything, at least you kind of have this as a map and a guide that you start building your financial house. And I don't mind
Wow.
doing that because we don't, as people, as African Americans, as families, we don't talk finances and credit and life insurance a lot,
Wow.
and we need to. So
Yes.
even if you're like, no, I don't want that insurance, fine. Here's your financial needs analysis, and you can start working on this to maybe, get, like I said, get out of debt. You want a house, don't have one yet, because all this money is going over here to pay these bills. Here's a way that if we work this in 3 years, it's quite possible that you can pay off all your credit card debt, or 5 years. So
Wow.
based on their numbers. So, and like I said, I love helping them. I did it myself. I ended up, that was the other thing. I'm also, obviously I'm an agent, but I'm also a client. I got my own policy and everything, but also use some of these same methodologies to build my credit score up. So that in 2020, we did buy a house. So I was
Wow.
able to take that score, from where it was to where you got to walk, like I think it's the Migos, you got to walk it like you talk it. So, and I
Yes.
wasn't doing that. So I didn't want to be critical with it either. So I worked on me, and then look, if I can do it, I can help other people do it.
Yes. I love that. That is amazing. Just for you to
Yeah.
live through what you're teaching others, that's amazing, and then you came out successful, and then you have
Mhm.
the experience to know what actually works and what doesn't. So that's amazing.
Yes.
You gotta want it, though. You
Thank
gotta
you.
want it.
You do. You gotta want it. You gotta put in the work.
Exactly.
It's not gonna be easy, but you gotta put in the work. But the reward is definitely there once you've seen the fruits of your labor.
Yes, I love that. Now, can you explain the difference between term and whole life insurance?
Yeah, and let's talk about that. And I'm gonna try to keep it. Don't want to go too far into it, and want to because that's another thing I might have said too. What the people think it's difficult and hard to understand. It's not. Term insurance is just that. You have your policy for a set amount of time. Usually in five, you can get it in increments of five. So 5, 10, 15, 20, 25, 30, 35. Now, within term insurance, there's different types of term insurance. Level term, which is what I offer, means that, if someone gets a policy from me and
Mm,
that policy is it's hypothetical, $35 a month, that's what they pay for the term. There are some other policies that every 5 years, your rate increases. And
mm,
while that may benefit some, and I don't want to knock any type of term or hold that's out there, because I also have tons of friends in the industry that do certain things. I don't want to knock anything, but for me, I feel like just having level term for is the best, because I know what I'm paying each month. You
yes.
know, my next age bracket, is 55 to 59. And
Mhm.
if it goes from $35 to $65, that might put a stretch on me. And then what am I
Yes.
going to do? I
Yes.
want to lock in my rate and know what I'm paying. And with term
Right.
insurance, it's just that. It's the typically it's the most economical insurance for the larger death benefit for
Mm.
that term that you are in. Now,
Ah.
whole life and some of its other variations like variable, IUL, things of that nature, it has two components. It has the death benefit component and the savings component.
Mm,
That could, based on someone's needs, that could work for them. It is more costly because you're paying for two things: the
mm,
death benefit and the savings. Now, one of the caveats to it, though, is if you do have a whole life policy, you have what's called cash value, and that cash value is the savings that accumulates. Now,
mhm,
if I have that whole life policy, and when the time comes and I pass away, my beneficiary has two options. They can take the death benefit or the cash value, but you don't get
uh-huh,
both. And that's what people don't know. You're going to get one or the other. Now, most likely, the death benefit is going to be greater than the cash value, but guess who gets the cash value?
who is that then? Then, insurance person?
Yes, the insurance company, not the agent,
Yes, yes.
but the insurance company.
Oh, wow.
Now, if I was getting it, I might change my philosophy, if that's what comes. But no, yeah. So yeah, go ahead and get that. Yeah, go ahead and get that death benefit, and just let me go ahead and get this 10,000 that you had saved up over here. Don't let me come in.
Right.
But no, the insurance company gets that, and so. But if any type of those policies is what someone wants, I'm
Mhm.
okay with that. That might fit their need. And I'm also a
Right.
proponent of having both. I actually really think you should have both. I think you should have a term one for the long term. And, if something for like a cash value, whole life, universal, anything like that fits your need, I think you should have that too. So I'm actually a proponent of having both.
Yes, and not
But
only
in a
having
nutshell,
go ahead, in a
I was going
nutshell.
to say in a nutshell, yeah. In a nutshell, though, those are the different. That's what term and whole life cash value is in a nutshell.
Okay, awesome. So another thing is, when I started shopping for life insurance, it was more so just on the job. But I was like, what if I'm no longer
Mhm.
working here? It's no longer going to be valid. So how do I go about that? So then that's when I reached out to an insurance company outside of my job because I'm like,
Mhm.
I believe I'm gonna keep this one longer than I would keep a job because you never know with these
Mhm.
jobs. And so I
Right.
definitely, recommend, and I don't know if you agree with me, Brian, recommend getting some life insurance outside of work.
Oh, I absolutely do. I
Yeah.
totally agree with that. And I actually agree with having it at work and I heard this term and I thought it was so funny. And I kept, if it's free, it's for me. The group
Yes.
life insurance that we have is part of our job benefit. Yeah, I'm gonna
Yes.
take that. If it's free,
Yes.
it's for me. But like you said, if I leave that job, that insurance doesn't come with me. I
Mhm.
need to have, something that I am in control over and I have, regardless of what happens with my job.
Right.
So
Right.
I so I
Yes.
say get both, and I have both. Yeah,
Yep.
I have them both. Mhm.
Definitely get both. And now, what are some red flags to watch out for when shopping for life insurance?
Making sure that your needs are heard. Like I said, I offer my term life policy. And if that's just something that you're dead set against, I want to refer you to a good person that I know can help you. You want to make sure that the agent's just not pushing something on you that you don't feel like is what you are going to want. I
Right.
would also recommend too sitting down with a local agent versus just going online and just doing it myself. I want the expert to talk to me, put something in my
Mhm.
hand, give me some information. I know we're in this tech age where yeah, you can go online and do something and get coverage and whatnot, but I think it's best that you do sit down and talk to someone that's going to educate you and not necessarily sell you, but educate you on that. And
Yes.
make sure you've got. I would Google the companies, check them out, make sure they have A+ ratings with everything, and that way if you go with that company, if you do need them, they're going to be there for you, doing the right thing for you. And again, thinking of you as a person and not just another policy and a number.
Right. Or another commission.
Yeah.
Definitely.
Exactly.
Yeah.
Exactly. Um,
Now, how
and then
often
like also too, go ahead.
no, go ahead.
I'm sorry. I would say also too, again, too, if you're thinking of once you've decided what you wanted, like I shared, make sure like if you are going with term that, it is the type of term that you want. Some people may want to increase every 5 years. They might, and I'll give you somebody that can help you, with that. Or, if you want level, we'll make sure we have that. If you do have, if you want whole life, cash value, understand how that works. The cash value part of it typically doesn't even start to really accumulate to about 2 to 5 years in, depending. And make sure they explain to you that if you wanted to borrow against your cash value or use it, how those things work. Just don't let them tell you, oh yeah, whenever you want to get that cash value is yours. It doesn't necessarily quite work out that way, because you do need to pay. It is advisable to pay, because if it got to a point that it was too low, your policy could lapse, and you don't want that.
Right.
So you want
Mhm.
an agent that's going to tell you the truth about your policy.
That's right. That's right. I agree with you on that. I don't want to feel like I'm getting scammed or whatever, or I'm just getting a policy just to get a policy. Now, I know you talked about
Mhm.
you are doing level term insurance. Did I say that right?
Mhm.
Okay.
Mhm.
So with you doing level
Yeah.
term insurance, I understand it is a set rate each month for the life of the
Mhm.
policy. And
Mhm.
tell me, what is the benefit for the other one that actually increases every 5 years?
In my opinion, there isn't, because again, I'm paying more. I'm paying more now. One of the things too that with insurance, Brittany, as you go through and mature in years, by the time I get to retirement age, I'm going to want to not even have or want insurance, to be honest with you. Because if I've done it right and I've invested my 401k and everything, I'm good. So when I'm young, I want a lot of insurance. As I
Yeah.
get over here to, my 60s and 70s and retire, maybe I just want something for final expenses, but hopefully I won't need any insurance at all. So if
Right.
that is my goal, why do I want to keep paying more into something that at some point I'm not even going to need?
Right.
So that's why, in Brian's opinion, it's level. If I get this and it's 35 a month, that's what I'm paying until it's over, and not jumping up increments over time. That's not. I don't see the
Yes.
benefit in doing that. I don't.
Yes. And since we're talking about 401ks and retirement age and things like that, can life insurance be used as an investment? And if so, how?
It is possible to use it as an investment. Very, very possible. Um, Now, because I don't have my securities license, I don't try to get too far into the investment piece of it. However, I can, if someone's interested in how that works, I'll be glad to get them in contact with someone. And that's where, Brittany, you would want to use one of the cash value policies
Mm,
on that, and someone who is licensed in that or has licensed in it would be able to sit down and tell you how those particular things would work. But yes,
okay,
it is possible.
okay, awesome. At least we know that if we're coming to you, at least for some of the things that we need, and it's not in your scope, you can at least, give us the resource of someone else to help out, and we know at least
Mhm.
they got the
Exactly.
best interest for us.
Well, I do. I mean, and there's enough out here. I'm not in competition with anyone. It's
Yeah,
enough room for everybody to eat. And I'm like I said, I don't just, I don't. I now my personal philosophy is term life because it's pure insurance. I'm going to get more for my money and invest the difference.
yeah,
That's my personal philosophy. However, I will not discredit or deter someone, if their methodology or methods of thinking, are different. Yeah, let me get you with someone that can talk to you about it, and then once they get more on it, it may turn out that that's not the way they want to go. Or if they
right.
do, great. But if not, they can come back to me and say, well, let's get this term life going, and then let me talk to your guy that is securities licensed, so I can start this IRA, so I can start this thing up and do it that way.
That's right. That's right. I know that's right. Now, how can someone use life insurance to leave a legacy for their loved ones?
Kind of like how we talked about when we talked about the dime or the
Yeah.
multiplication of years. So, and I'm trying to keep the math easy for myself, but hypothetically speaking, if I'm making 100,000 a year, if I multiply that by 20, is that $2 million? And
Look,
if that is
you
my policy, right? That's how you leave the legacy. You get the big policy so that the one you're passing it to can continue building the legacy, using that money potentially to build a business that
yeah.
he or she is going to leave to their child, or them extending the same, teaching them the same philosophy as you. Get the big policy. That's how others in times past have done that, and they've left that legacy to their children where we have not done that.
Mm,
So that's how the leaving the legacy is by pretty much leaving the biggest amount of money to your beneficiary or to your child through that life insurance.
generational wealth. And it's easy.
Generational, right? Generational. And like I
Yeah.
said, others and other races and other people are way ahead of us on that. They've been doing it longer than we have. And, and that's also probably too, because Brittany, it wasn't until the Civil Rights Act of 1964 where insurance companies stopped discriminating against us.
Wow. Didn't
We
even know that.
it's been rough. We've been behind the eight ball on it for a while. Now, two, when they stopped discriminating, they did kind of lead us to go with the whole life cash value policies when they
Mm,
would when they did talk to us again, because even in the 60s and 70s, it meant it's good, it's more, it's bigger, because my mom, honestly, she swore by whole life, whole life, whole life. And when I told her I was going to be an agent, and she was like, "Well, let me get a policy. Let me get some." Mom, that's not what I do. I do terms. Man, listen, but that's what she knew, and
yeah.
not necessarily that it was bad, but that's
Yeah.
what she knew. And they weren't still in that way explaining things all the
Mm,
way through. It was just like, "Hey,
wow.
whole life is the way to go. Take this policy, and be good." So
Yeah.
another reason why I'm passionate, is again, is to get to help us as possible, leave that generational wealth to our children so that they can, build on it, for theirs, and leave them something and build and build and build. Because we're behind eight ball on that.
Yeah. Yeah, we are. I definitely agree with you on that. I try to educate people even when they don't ask. I'm like, hey, you got life insurance, right? Because that's definitely leaving a legacy. We can
Yeah,
you can
definitely.
stop eating out at McDonald's at least once a week, and that money can go towards your monthly life insurance policy. You know?
Facts. Facts.
Yeah.
Exactly. Right. Right. It ain't hard, and you may, like I said, you may have to give up something, maybe, sacrificing, a couple of Starbucks. You good. And shift those resources elsewhere to
Right?
help you. Right. You're absolutely right.
That's the truth. So is there an impact on someone's occupation or lifestyle on their life insurance rates, or is it all the same for everyone other than
Well,
age and
it
health?
can be. And we'll come back and talk about the age and health. Hopefully, we can come back to that.
Yes.
But the occupation question is a great question. And Brittany, as you know, and some of the, I guess, the people out here don't know, of course, I'm a huge pro wrestling fan.
Yeah.
Pro wrestlers can't get insurance. But what they do, athletes have to use like Lloyd's of London to get their policies. They can't just, get the policy of the regular person. When we're doing underwriting, we ask questions like about your occupation. If you came to me and was like, hey, I'm a professional skydiver, I might not be able to cover you. So
Oh,
yeah, they're based on occupation. Getting coverage might be hard, or when you do get it, it's going to be an astronomical
wow.
payment to have it. You know,
Wow.
me as working in customer service, sitting behind a desk, I'm good. I'm not really. But if I'm jumping out of airplanes, or if I'm a pilot, a helicopter pilot, a race car driver,
Wow.
scuba diver, basically the more danger and risk in the job, you can anticipate having higher insurance premiums or maybe not being able to be covered at all.
Wow. That's interesting. And so it's kind of like car insurance. So, the faster
Right,
cars, it costs more.
right.
Okay.
Right. Right. Yeah, my
Wow.
Honda, if I get a Porsche, it's gonna cost me, but my Honda, 30 $35, not
Yeah.
350. Right. Exactly.
Right.
So yeah. So more risk involved, the more it's gonna cost you. Yes.
Wow. That is so interesting. I'm glad you said something about a pilot or a race car driver. So, we're off the topic question. Well, not off topic, but if someone is just skydiving, just to skydive, to go have fun one day, and something happens to where they're no longer here, will insurance cover that?
May or may not. It may not, because Brittany, we actually ask you again in the underwriting, your occupation, or what do you plan to do this in the next year, or do you plan to
Wow.
do that in the next year? We actually are in our questionnaires. We have risk management type questions in there, and if you say no and then go do it, especially in what's called a contestability period, which for most companies is 2 years, it's a possibility
Ooh.
that the company may not pay. And I'm speaking globally. I'm not saying what a company
Yeah.
will or won't do, but just in
Right.
that contestability period, yeah, it's possible. If you possibly misled us in what you do, secretly you're like a secret agent and
Yeah.
you went over here and did something and came back and you didn't tell us, that could be, once we investigate and find out, could be a problem. Could be.
Ooh. Wow. Yeah, that kinda make me wanna read my policy because I just wanna go skydiving, but you never know what could happen, so,
You know,
now I wanna read my policy.
I think you should. I think you probably should read it, but yeah, but I
Yes.
know you were adventurous, so but yeah, you might want to check the policy out
Speaking of that, how
and
often
see.
should someone read their policy? How often should they go over it?
In my opinion, Brittany, annually, because things
Mm,
change.
yes.
Starting out, you may be single,
Yeah.
then you get married, then you get the kid and a new house and everything. So I would say look at it annually to
Annually.
increase or possibly decrease. Because, like we
Yeah.
said, over here on this side, you may not need as much. So
Right.
annual because of life and changes. Yes,
Okay, awesome. So going back to the skydiving, one of our viewers had a question. Would that be accidental insurance?
the accident and accidental death insurance, it may fall under that, but
Mhm.
like again, I don't want to like mislead the young lady that asked the question. Would want to mislead her, with that, but it could possibly fall under accidental death, possibly.
Okay.
I'm leaning toward not, especially if you chose to go do that, so we'll have to see.
And the next
Like,
question, and with
I would suggest they talk to their agent, talk to their
yes,
agent.
yes, definitely. And the next question is, would that be annual for all insurance, all types of insurance, whole term or?
I would, I would say yeah for all types, like even for auto, or home. What if
Yeah,
you added a security system to your home?
yeah,
Within that, hey, I need to let you know some things change. I've got, you know, um, new home security. I've got some things going on that I've done. Don't I get a discount for that? Multi-car
right.
discount? Yeah, we got two car. So again, even so, for all types of insurance, in my opinion, it's best to do annual, especially if you know you've had some good changes to make them
Yes,
aware of, because my agent's not going to know if I got a home security system. He's not
yeah,
going to know until I tell him.
exactly.
And a lot of times when they do their renewals, of course, it's an auto renewal. They don't ask. They don't give you a call to be like, hey, your renewal's coming up. Any changes? What's going on? You need me or anything? I just
Right.
got mine. It's
Yeah,
letting me know that this amount is coming out on the 28th. They didn't call.
right.
They didn't call. I don't have any changes, but no, so it wouldn't hurt to do annual on everything.
Awesome, awesome. That's amazing. Cause yeah, you don't know. You could be saving some money just by saying I got an alarm system now. That's
Mhm.
really that's
Exactly.
really something to think
Yeah.
about. We did have a question of what are the length options for term coverage?
In increments of 5, 10, 15, 20, 25, 30, 35.
Awesome, awesome. And would term be a great coverage for a 76-year-old? And if so, what would be the cost for a $20,000 term?
That's going to be tough to say. I would recommend talking to an agent that is like independent and does have different companies that he or she works for, to just kind of see what's out there to get the quote and to see. I know for us that could possibly be might be costly. It might be based on, again, that 76-year-old's health and things like that. It could be costly. So in that regard, I would consider you just kind of working with someone that has a couple of different options they can work with, and reach out to who they're contracted on to get you some numbers on that.
Yes, yes. And so with term insurance, of course, you have your every 5 years thing, but can the policy that you get, can it be extended that you have in effect, can it be extended?
Yeah, once that policy ends, with most companies, you're going to you're going to be their customer for life, and you can continue on with them, but it's going to continue at the age where you are now. So
Mm,
if I got a policy at 21 and only kept it for 10 years to 31, my new policy is going to be rating me at 31. But let's just say, for example, I got it at 21 and I kept it for 30 years.
mhm.
It's my 30 years is going to be, I'm paying based on if I got it when I was 21.
Oh, wow.
See what I'm saying? Yeah.
Okay. Okay.
So
Awesome.
it'll renew, but it's going to renew at your new, at what your new age is.
Right.
So, and
Okay.
again, and you can stay at and if you can stay at that amount, probably going to be less coverage, or you can look at again seeing I know I need this now, so let me see. Tell me what these numbers are now.
Mm. Wow. And so how accurate are the quotes? Like from actually getting the quote and to actually obtaining the actual term.
Good question. So how it works again is this, and let me just take it back a little bit. What we normally would end up doing is based on two factors: age and health, and smoke versus non-smoke.
Mhm.
I'm gonna go ahead and tell you, if you smoke, it's gonna cost you more.
Yeah.
But age and health is what the insurance company wants to know.
Mm.
So without any doing any underwriting, I can take, tell me your date of birth and tell me if you smoke smoker. And you say, well, Bryan, I'm thinking I want a 15-year term because my youngest will be in college by then, they'll be on their own. I just need to get set for the next 15 so I can take that, Brittany, and punch in some numbers and say, hey, this is what for this $150,000 worth of coverage for the 15-year term, it's going to be, again, hypothetical, not a real necessarily real number, but 2478 a month. And you're
Mm.
like, okay, bet. But then underwriting, and we find out that Bryan, has high blood pressure. And he didn't tell me. We find that out through the medical and the underwriting. It could come back as rated. So we can cover you, but it's not going to be that 2478. It's going to be 3672. So
Mm.
it depends on age, health, honesty, and honesty of the underwriting. But
Wow.
it is best to get the insurance young and for a long time, in my opinion, because you're never going to be as young as you are right now.
Right?
You, you're not, you're not, you're going to be a year older next year.
Yes.
So the rate could change. So,
Yes.
so I would, so for college graduates just coming out, things like that, those people in their 20s, get it while you're in your 20s because
Yes.
you're going to get more for your money versus, thinking, well, I'll just wait till I'm 40 and when I got the wife and the baby. Well, now it's costing you this arm and leg now because you're 40 now and you've been eating all them good meals and now you got diabetes. And I don't want to joke about that. I ain't trying to be joke, but things
Right.
happen.
Yeah, you're
You're
right.
the younger you are, that's what you're going to be, and and that health and that good health, that's when you is best to get the insurance then versus hoping to be able to get it later. And like I said, based on health and conditions, agencies may not cover you, and if they do,
Yeah.
it's going to cost you.
Oh yeah. Oh yeah. And it's important to think about health when it comes to life insurance. And so that brings me to
Mhm.
the question though. Let's say that someone did get a policy and they, had horrible health conditions and just off the charts, barely being able to get a policy. And
Mhm.
they get healthy, all numbers in checked and everything, and they contact the insurance company again. And I know again it deals with age as well. Would there be
Mhm.
a change on the policy as far as the price?
Potentially, but potentially. Um, I will say potentially. Can't necessarily say yes or no because I wouldn't necessarily know all of the factors of that person. But again, like within policy, let's just say And here's the thing: it's a business relationship. I might get this 30-year policy, but 2 years in, I might decide to cancel it.
Mm,
That's well within my right, so I
yeah,
can do that. But again, reviewing your stuff annually, yeah, it could very well, you might have gotten yourself into health. Now you're going to be older, but you may be healthier. There may be a balance.
yeah, yeah. Oh, wow, that is something to think about though.
It is. It is.
Yes. Now, You, as a life insurance agent, what has been your biggest challenge that you face?
It's not the sexiest topic. Death, life insurance, things like that. And going back to again some of what the misconceptions. Not thinking I need it now, just thinking of it as a bill that I don't want. Brittany, I literally will tell you that when I first started out and I was sitting down with someone and was talking to them, ran them some numbers, gave them some numbers, they thought that was too expensive, but they had the latest iPhone.
Oh,
So I asked them a question. I was like, I respect that. I was like, cool. Can I ask you a question? Sure. Do you have cell phone? Do you have insurance on your cell phone? Yeah. And I left it at that because you know me and my sarcasm and my wit. I didn't want to take it any further than that, but they got the point. So
yeah.
you value that cell phone more
Mhm.
than you value your life. Potential, maybe, but I didn't want to go there. I didn't want. I felt, but I did ask. Well, yeah. So again, just helping people see that, yeah, it is a bill, but yeah, it's something that think about it. We don't about this and we don't necessarily want to talk about death, but I'd be leaving people behind that have to deal with the stuff that happens when someone passes. I don't
Right.
want them having to worry about paying the funeral director because he ain't gonna do this funeral until he get his check. We know this.
Right.
We know they want people want their money. So I don't
Right.
want to see a GoFundMe, or the
Right.
fish fry stuff. Now I don't mind a good fish fry, but I don't want it to be that we trying to raise money to get to put you
Right.
to put me in the ground. It shouldn't be that way. So just changing the mentality of what insurance is and why
Mhm.
we should have it and why we need it. That's one of the biggest things that you got to overcome. And that's
Yeah.
okay because we've been taught and conditioned for it. So, but you just got to, like I said, you just got to sit with people, give them factual information, kind of work with them, for budgeting and things. I do get that. Don't get me wrong. Budgeting, I can't count your coins.
Mhm.
Don't want to do that, any
Right.
things like that. Because if you're telling me $15 a month is all I can afford, I'm gonna try to find you something for 15 a month and see what that is. Now maybe we're gonna work, but then like I said, maybe we're gonna kind of work to see, well, maybe I can help you shift some resources over. Let's see
Right.
what we can do. And if we do that and do it for free and I end up saving you some money over here, oh great. Well, now I can shift some of this money and put it to
Right.
getting more insurance, things of that nature. But again, dispelling the myths of
Yes.
what we've been taught and sold and told is kind of one of the biggest obstacles one has to overcome, in my opinion.
Yes. I agree. I agree. Now, can you explain the process of filing a claim and what beneficiaries need to know?
Yes. Well, you're going to, of course, reach out to the insurance company. They're going to want a certified death certificate. They may ask for other things based on how the customer passed away. They may ask for a medical report. They may ask for a police report. That claims person will let you know everything that is needed. A lot of things though can be done online. You're gonna want to have the policy or the policy number to give to them so that they can help you out. But a lot of that is done online, and they'll tell you. They'll tell you what they'll tell you what they need. But the basics is having the death certificate.
Sounds good. Now, what's the best way that families should store these policies or keep the information available for family members or friends?
That is a good question. Britt, we're in this technology age now. Um, to be honest, all my stuff is online, but I will suggest, printing everything out and, maybe just keeping, your important documents in a safe, in a safe, in the house or in a safe deposit box somewhere. I would recommend, just keeping those documents safe and just letting, that person know, hey, if something ever happens, this is where it is. This is where the key is. Here's what you will need.
Yes. Yes.
Definitely, I
Um,
definitely do think we need a hard copy, or giving that person access, to your whoever company that you're with, giving them your login and ID and everything so they can log in and get the information. But no, I'm old school too. I like a hard copy because that's what Mama taught.
yeah.
Gotta have that, gotta have hard copy. And I
Gotta
need to do
have a
better with that.
hard
I do need.
copy
Do need to,
in the metal filing cabinet.
yeah, facts, facts. Yep, that's it. And
Yes.
she has one too. She
Yeah.
has one.
When our company was remodeling, I made sure to put my name on one because I need one of those at home. What advice would you give to someone who is just starting to think about life insurance?
um, think about it for the long term. Look at where you are now, but also look to what you think your life is going to look like, and think about it for the long term. Because, like we said, if I'm talking to someone, in their 20s, maybe not married yet, but what if they got a child? What if they think, what if they are seriously dating someone? We got to look at that. You know, getting ready to buy a house, you got to think about that. So
Yes.
if something would have happened at his house, you want that house, hey, to be paid off. We ain't got to worry about this. So my advice is to think long term and think, what is my future going to look like down the road for this insurance need.
Yes. Yes. Agreed. Agreed. Oh my
But it's
goodness.
also okay to think short term too if that's what they want to do. It's also okay to think short term if that's what the client wants. But like I said again, I suggest think about down the road.
Right. Right. Agreed. Agreed. I truly appreciate that information. Any resources that you can give to our viewers today, a way to contact you, or how can they set up a time, or whatever, or any other questions
Yeah.
that they have? How can they get in contact with you?
Yeah. Brittany, they are more than welcome to call me or text me. I'll be glad to give out my cell phone number, and also email. Also, my email. They can do both.
Okay, awesome. And we have Brian's
Thank
email address here. Um, Viewers, you're welcome to contact Brian. Brian is very helpful, and very knowledgeable about life insurance. So let's make sure that if you really want someone that's looking out for the best interest of you and your family, to contact Brian, and he will get you your needs, and also um, get you the help you with others, if you have other, like, auto insurance.
you. Hmm.
Yes, yes. And Brian, I
And
just
this, I'm
want to.
not sure if they can see it. I'm
What's
sorry,
that?
Brittany. I'm not sure if they can see it, but when I do meet with someone, this is what
Uh-huh.
I do kind of leave with them. It's called How Money Works. And it is a guide to, talking about, high levels of investing, difference between term life, whole life. So because, people are also visual learners, we can sit down and talk about it for 30 or 45 minutes. But, here's some reading material for you so you can kind of go through it. It talks about the debt stacking for, getting out of for credit cards. It talks about term life versus whole life. It talks about the rule of 72, which is an investing term. So it gives you those
Mhm.
nuggets. And then, and then if needed, we can expand on it. And again, like we said, sit down and talk about it when we do your financial needs analysis. But yeah, I leave my client either a physical copy of this or send them a digital copy.
Awesome, awesome. That's, I swear, that's helping. That's a holistic approach, helping them financially from the ground up, and that's amazing. That's
Mm-hmm.
amazing.
That's it.
I
Thank
truly
you, Brett.
appreciate you. Brian, I thank you so much for joining us today and sharing your expertise. When I say you have given our listeners a lot to think about when it comes to protecting the loved ones and planning for the future, it has been amazing. And I'm pretty sure there are many more questions, but we did go ahead and put Brian's email on there. So definitely reach out to him. He'll be sure to connect you, or
Mm-hmm.
connect you with someone that your needs are needing to be met or whatever. But definitely, Bryan,
Yeah.
I truly say that again.
Hey, I was just laughing with you, but I also too. They keep in mind too. I know we said I do enjoy, like, the sit down face to face meeting, but at the same time too, I do virtual appointments as well. Some, because
Good.
some may not want to meet up or something like that. So virtual appointments through Zoom, or kind of like we're doing right now, are also
Right.
totally acceptable too. I do both, but I will buy you a cup of coffee or buy you a latte though if you meet me at Starbucks. I will get you that.
I might have to think about that, Bryan, because I just want some free coffee, and then we could talk insurance.
I got you, because you got me out my comfort zone tonight. I'll do it for you, Brittany.
Well, listen, I truly appreciate you. I really do. This was amazing, and I'm sure it's going to help those that have been, questioning, whether they should get life insurance or how. So this is amazing. I appreciate you, Bryan.
Thank you, Brittany. Appreciate you too. It was a
Thank
pleasure.
you. So that is it for tonight's episode. Thank you all for tuning in, and we will see you next time. Every perspective is a seed, every story a horizon. Thank you for walking this field with us. If today's conversation sparked something within you, stay with us. There are many landscapes to explore. Subscribe, share, and keep the conversation growing. Until next time, keep your heart open to the fields ahead.